Thank you for joining me. My name is Ola Ibiwoye of Commercial Property Club. I'm the host and founder of CPC Commercial Property Club. Once again, just like we always say, we're all about knowledge when it comes to income producing property, and that's what we're going to do again today. I would definitely would always bring on board people with great knowledge, expertise in the industry. What am I saying? We're talking about bringing thought leadership into the commercial real estate aspect of things, thought leadership in the income producing property, income assets like apartments, senior living, retail warehouses. But today in particular, we'll be focusing more on the apartment aspect of things today. I have a great man joining me today that has done it for several years, well over a decade. He's been in this industry, he's done great and mighty things, and we're going to be sharing vast nugget today out of experience. That's what we're going to be sharing today. I will go briefly about this man I'm talking about. His name is Spencer Cullor. He's the founder principal at Apartment Investors. Apartment Investors are partner-oriented, vertically integrated investment platform in which private investors that acquire high-quality multifamily investment through fractional ownership create amazing return. Together, they partner with equity partner, and also too, he's the owner of Cullor Property Management, management in the aspect of also specializing in full service of property management for multifamily and commercial property. That includes leases and management and the accounting, all aspects of management things when it comes to income producing property, particularly the multifamily aspect of things. I'm going to touch bases on his bio a little bit. He's a real estate investor, a business owner, and author also too. Speaks in conferences, meets out there. Spencer has developed an extensive background when it comes to commercial real estate, the aspect of multifamily. He's also done several great things also in the residential aspect of things. Over 12 years of experience in real estate, including asset management in multifamily, retail, office property. Wow, this guy has done vast number of things. When it comes to underwriting, he's done it. When it comes to due diligence, asset management, property marketing, even up to the fact that he's done great things also in the aspect of raising funds with private equity, and also he's done construction too, also in this space. Talk about experience. I have somebody today that will talk about what he's done and also is sure about what he's done. Spencer has also done some other things in terms of development. He's rehab, he's done flips, he's done management specializations in several aspects of multifamily. He's been part of acquisition and disposition of over 2,000 units of doors in apartment acquisition and development, which is in the tune of $140 million. Currently now, he has grown Apartment Investors portfolio. Asset under management is 1,200, that's 1,200 units, which is valued at $95 million. Well, wisdom is justified by our children. You can see right there that Spencer has really done so much in the aspect of multifamily, vast experience, and is from the place which are called, Overland Park in Kansas. That's where he resides. And, we have a lot to talk about today. This man today that's going to share with us vast experience that he's done over the years. And we're here to listen to you. Without no further delay, I would formally introduce Spencer Cullor, the founding member of Apartment Investor. Spencer, say hello to my viewers, say hello to my audience.
Thank you so much for your generous introduction and for having me today. I really appreciate it.
Yes, sir. Yes, sir. It's you've everything I said about you is it's been amazing what you've done, and these are the kind of experience I want on board to share the real thing, to add value to commercial property club, to people listening to us all over the world. And today is another day. And today we will be diving into something you are familiar with. And I always like to share things, be more practical about things when it comes to apartment investing. And today, before I start my question, if you want to just tell us about, if you want to add one or two things to what I just said, you're welcome to do that before I start asking my question.
Yeah, no, I just appreciate the intro. Yes, we started here in Kansas City and started with a little 40-unit apartment complex and have grown. I think our first acquisition was $1.2 million, and we raised $200,000. And I thought that was extremely challenging to raise that 200, and it just, I think, consistency and we've grown slow but steady and really focused on the operations, and yeah, it's been a whirlwind. I believe we've done 15 or 16 projects now.
Oh wow!
So it's been good.
Good, awesome. Small beginnings is always, not despising the days of small beginnings. What you cannot imagine can actually happen if you stay focused and believe in what you started as something small, no matter how long it takes. Just stay focused. I believe is what you're trying to let us know today as regards to what you've done. Now, the main topic for today is practically something you have experience about, and that's tax advantage, passive retirement income with multifamily real estate. And that's what we are focusing on today. How did you start in multifamily? I know you alluded to it a little bit, but let's dissect it a little bit more. How did you start in multifamily?
Well, I actually started on the residential real estate side. My brother and I were building houses here in Kansas City, and we were building spec houses, and we'd build it. We would wait for it to sell, and we'd build another and build another. And then the market started to melt down. We started to see houses stay on the market longer and longer. And I thought, I really loved the building aspect of it, but I really disliked that I couldn't make any money until it sold. And depending on how long it stayed on the market, it determined what we made. And every time we sold a property, we had to start over in the business from scratch. So there was no residual income part of that. So I thought there's got to be a better way. And we started looking into different opportunities and ended up in commercial real estate, and then finally into some retail and office, and then finally into multifamily, where we've been ever since.
Awesome.
Yeah.
Wow. So the scalability was much better in the multifamily aspect of things.
Yes. Well, it was so much more predictable on the income. So we could make money when we bought it. We could make money during the operations. That was very predictable and consistent. And then when we sold it, we got another chunk of equity, or we could refinance it and go use that chunk to go buy more properties. So the differences between the residential side and then going into the multifamily side, it just took everything that we had learned and kind of put it on steroids.
Oh, wow. Steroids. So you alluded to the fact that, there are several ways of making profit when it comes to real estate.
Yes.
To me, it looks as if you're talking about the cash flow of things, as well as the appreciation of things, and probably even the tax chapter of things.
Yes, just the ability to do the depreciation on the assets, and accelerated depreciation on all the materials and things that went into a property to really make that tax advantaged income. And we kind of started as a way for my father had sold a ready-mix concrete plant, needed a way to take some equity and turn it into income.
Okay.
So that's where we looked into multifamily. And as we started going, we had other people that saw what we were doing and wanted to get involved. So that led to our first investors that we took into deals. Okay. And then performing well for them led to more investors and more projects.
Awesome. And when you look at the aspect of multifamily in terms of tax advantages, what are the tax advantages of passive retirement income with multifamily real estate? What's it all about?
Well, it's definitely one of the most tax advantaged incomes you can have. I always tell people, if you're making an 8% cash on cash return in multifamily, it's really the equivalent of 12 to 15%, depending on your tax bracket that you're in, because of the depreciation expense. So you can take offset the expenses and offset the paper depreciation losses on the property against your income. So you can lower the taxable income of that, usually by 90% plus on your cash flow. You can make that tax free for your investors. And then one thing we've really taken a big advantage of is the tax deferred 1031 exchanges when you go to sell a property. And we've done over 7 of those where we've rolled gains from one property into a new property that's bigger, better, tax-free or tax deferred, continue to be tax deferred into the future.
Yeah. Awesome. You mentioned 1031 exchange. Can you break it down a little bit for my audience?
Sure. 1031 exchanges is a tool that the government allows you to do, and their goal is to help you grow your portfolio in size so that someday when you pay taxes on the gains, you're going to pay them on a much larger profit than you would if you just started. So I think of it almost like a 401k where you get to put in money tax free. In that you take that rollover growth from one property into another. Now you have to follow a lot of guidelines as far as identifying a replacement property and keeping loan sizes the same or bigger. But it's really a tool that supercharges your portfolio in being able to go from smaller assets to bigger assets as you're successful in adding value to your properties and not paying taxes on the gain and taking that out in between. So you can defer those into a new project and keep that deferring for forever, potentially.
Wow. So there's great benefit when it comes to 1039 exchange as a tax shelter also. So that's what you're saying.
Yes, it can be a real big tax shelter. It can also help you take that growth that you've had in your equity and put it to work without taking out taxes on that. So you can keep deferring that so you can make it a bigger pile, bigger piece of equity. That's the cash flow. The cash flow off of that bigger chunk of equity is still covered by depreciation and tax advantage income, but you're also growing your money tax-free.
Tax-free.
Tax deferred.
Tax deferred, yeah, pretty much. You still have to pay that tax at the end of the day, but the present value of money is being, in great effect right now because, the money present right now, it's actually valuable than that which is the future, I guess. That's what that's one of the advantages that you have, I believe, so when it comes to deferring of tax. Another question I want us to also take a look at is how do you determine, when it comes, I see on your apartment investors, dealing with the investors out there, also choosing your asset. How do you determine which multifamily asset will fit your investment criteria?
Sure. Well, we have kept really strict investment criteria, and it's really been the same since I started to now. So always we have a combination that we're looking for of cash flow out of the gate, opportunities to increase the value of the property, and we look at how much money needs to go into curing deferred maintenance.
Okay.
So those are things we look at. How much renovations need to happen? What kind of cash flow can we get out of the gate? And then what can we do with that asset over, say, a 3 to 5 to 7 year period? And so we have that written down. We underwrite to our criteria, and we put out a lot of offers that have to fall in line with our criteria. So we don't change that. And if it doesn't fit our underwriting, we'll put in an offer to where it does fit, but that may mean that we may not get a lot of projects that we bid on. But the ones we do get have performed really well.
Wow. So it's important how you get it so that you can get out well.
Yeah, I think most of the profit on these projects comes from buying it right. You've got to buy it right, and then you've got to perform well in the operations. So just as important as buying the project right, you've got to have management of that property that is aligned with your goals on the property, and that's going to manage your business plan for the property effectively to grow that value of the property. Otherwise, you'll see projects that we'll buy from an owner, and they haven't pushed the operations on it at all. And maybe their property has maybe appreciated 10-20% over the last 20 years. We'll come in and buy it. We'll manage to a business plan. We'll do key upgrades, and then we'll be able to push that value of the property tremendously.
Amazing. So the
key is having alignment.
Yeah. So the key is buying right and making sure that you stay true to your business plan.
Having written down criteria, sticking with your underwriting guidelines, buying right, and then operating efficiently through your business plan. So making sure you stay on top of the operations. So you can't, even if you buy right, you're not going to make your business plan work unless you're managing well as well. So they have to with that. And I think that's one thing that people underestimate in multifamily real estate is that the amount of operations that need to happen and how strong your operations team needs to be to manage those properties effectively. It's not the same as going in and buying a building with a Starbucks in it and waiting, for those checks every month on a retail investment. It's something that you have to actively manage business plan.
Yeah, absolutely. That's valuable. What you just shared right now is valuable. And go, thank you for that. From your years of experience, what are the best tax advantage that you would say made your investments a great one?
Sure. Well, I think the 1031 exchange is the number one wealth creator in real estate, the number one tax advantage to be able to grow a portfolio long-term and to add a lot of value to your portfolio over time. I think that's the number one thing. But depreciation, having that either accelerated depreciation or itemized depreciation, and being able to go or compartmentalized depreciation, and being able to protect the income of the property through the depreciation is a huge advantage to your investors and in your team from a cash flow and operation standpoint. Wow,
great. And what are the benefits? If you say, what would you classify as the benefits of selling? No, because I know part of the cycles of equities that you draw from is self-directed IRA. What what can you say? How do you self-direct IRA? How does it work with multifamily investing?
Yeah, so we do work with a lot of self-directed IRA investors, and they really like it because they can take a lot more long-term outlook on it. So they can get the cash flow returns into their IRA, directly into their IRA, but they can also use that IRA to grow it from an equity appreciation standpoint. And they've got a little longer time frame that they can do that. So they can grow that tax-free within their IRA. So they can use the advantages of an IRA, the tax advantages of that, on top of the tax advantages from real estate, and really grow that over time. And so a lot of IRA investors, the reason real estate's good for it is because you can't just pull the money out of it at any time. So it's not a super liquid investment. It allows that investment to season and to grow over time. And there's very few things that can grow like real estate from an investment standpoint, from an equity standpoint. So you can really grow that money put away into that IRA over time.
Sure. Wow. Thank you for sharing that. And then, so I'm not sure maybe I'm trying to draw more out of it. So what are these statutory, or say, what are the benefits of self-directed IRA, multifamily investing, some of the benefits that you can highlight?
Well, one of the really cool things you can do through passive investing in real estate is you can, as a self-directed IRA investor, you can really do due diligence on the sponsor of that deal, or whoever's putting that project together. And you can really do due diligence on the actual investment that they're putting together into each specific property. Unlike a stock where you put your money in and you hope that that's going well, you have a lot more connection with the real estate investment that you can go out, you can look at, and you can see, and you can vet. You can talk to the people who are running that investment, and you can sit down with them, and you can tour the property with them if you're in that area. So there's a lot more due diligence you can do on your own of the sponsors that you're investing with, and their track record, and the individual assets that you choose to invest with as well. So you don't have to be part of a huge fund. You can go pick individual projects that you want to invest in. So you can kind of sort through, just the way we sort through projects, you can sort through projects as that self-directed IRA investor and pick the ones that meet your criteria. And so that's something we always try to find out, what are investors' goals? And we try to, not every project we have that comes across our desk or that works for our company works for each individual investor to get on their goals. So then we try to match up the projects with the people that it meets their investment goals on that project. So just like we do that with projects, self-directed IRA investors can do that with sponsors and real estate deals that they're looking to get involved with.
Awesome. So it's important, imagine investors go with the kind of investments that come to the table. So that, ultimately it's
the sponsor of the project. So you want your investment goals to line up with their goals. Just like when we do a project, we want our property management team's goals to be aligned with us as an asset manager and our goals for the project. And so it's all about alignment and picking out sponsors that you gel with, and that you believe in their philosophy for how they manage investments. Because I can tell you, as a real estate investor and as a sponsor myself, we all do things a little differently. And
absolutely,
we're a better match for some people than others. And and some projects are better for us that don't fit other groups' criteria. So I think just really vetting the people you're investing with is one of the huge advantages you get as a self-directed IRA investor, because you're not just putting in, you get to choose exactly who you invest with, which projects, and when and why.
Awesome. Thank you for addressing. This is a good point you talked about. And you mentioned something about property management. That would be my next question. Is that how important is property management when it comes to multifamily investments?
Yeah. Well, in multifamily, if finding the project is like the air, managing it's like the blood. So it's just as important as finding the right project as the management of that project.
Okay.
And multifamily investing is very management heavy. So
Okay.
you need to be very actively managing those projects for them to meet your goals. It's real easy for when you're managing 1,000 units for it to start to spin out of control if you're not staying on top of it every day. So your management has to be very active in the projects as the sponsor.
Okay.
And the management team's goal needs to be the same as the sponsor's goal and the investor's goals in the project.
Okay. Awesome. Thank you for addressing that. And, I wanted to, with the kind of success your team has made over the years, it's impressive, very impressive. But I know sometimes there are things that you wish and look back and say that, no, we shouldn't have done that. For the sake of newbies, for the sake of people that are, going in, and that would be the last question. What's your advice, coupled with the things that you say that, okay, this is what you need to do to get started. This is what you don't want to do, to cap up the show,
Yes. Well, one of the most dangerous things at the beginning is you don't know what you don't know.
Tell me about it.
So I think partnering with people that have a lot of experience and learning more about the business, I think you've got to be a student of the business. It is a full-time business and you have to be a student of it and you have to learn as much as you can so you avoid making big mistakes when you get started. If you way overpay for a project, it's hard to make it work a lot of times. So you start off on the wrong foot. If you don't look at enough on the physical aspects of the property and you buy something with a ton of deferred maintenance and you don't know how to fix that or you don't have the funds to fix that, that can be a big challenge. So a lot of it is learning really how to financially evaluate a project, look at how to physically evaluate a project. I would say start small and start local. So if everything hits the fan, you can be there to take over. And at the end of the day, you care more about your project than anybody else.
Absolutely.
So ultimately your responsibility. And so like for us still, even after all these years, we still only invest in projects within a 4-hour drive from our headquarters.
Oh, wow.
We do that is so if anything goes wrong, we can be there within a half a day's drive to take over if something's needed or we have a major emergency or those kind of things. So I think you can eliminate a lot of those risks by investing locally if you're going out on your own in a market that you really understand, or by investing with people that have a lot of experience that can help teach you the business.
Awesome. Those are good advice that you're given entering this business of apartment investing. And the show has come to its tail end. Practically, if people want to reach you, if my students want to get across with you, people being in life, they want to have a call with you. I believe that provisions that, and also to what would you like to share with my audience today as
Sure. Yeah. If they'd like to connect with us, they can go to our website at apartmentinvestors.com. And we do offer some free 15-minute portfolio consultations.
Okay.
We can go through your investment goals or what you're currently working on. We're always happy to provide feedback, even if you want to go out on your own and do your own thing. That's completely fine with us. Our goal is to have as many successful investors out there as possible.
Awesome, awesome. As you can see, it's been a wonderful show with Spencer Cullor. Like I told you, Spencer comes with a lot of experience, and he's done it. He's speaking from experience, and as you can see, valuable information that we brought to the table here in CPC today. He's told you how to get across with him, also to www.apartmentinvestors.com, and also to, I told you, he's the owner of also a management company in the apartment space, which is www.cullorpropertymanagement.com. You can reach him also to on 913-324-5900. Wonderful time we've had with you today, Spencer, here on CPC, Commercial Property Club, where we serve investors with valuable knowledge in income-producing property. Thank you for joining us. Hopefully, we can invite you some other time to dissect some other aspects of topic that we might have, okay? Thank you,
Thank
Spencer.
you very much. I'd be happy to be back anytime.
All right. Enjoy the rest of your day.
You too.
All right. Bye.